Welcome, everybody, to episode number 7 of our Deep Banking podcast. Today, I'm very pleased to welcome Nick Woodruff, the Chief Strategy Officer of Trust Bank. Why don't we start easy and you introduce yourself and Trust Bank a little bit to our audience?
Great. Martin, thank you very much for having me. I'm very excited to be on the podcast today. So, yes, I'm Chief Strategy Officer at Trust Bank. For those of you who are not aware of Trust Bank is a digital bank in Singapore. We are formed by a partnership between Standard Chartered and FairPrice Group. We launched about 3 years ago. And since then, it's been a story of a rocket ship, really. We've grown to over 1 million customers in Singapore alone, which is, in a market context, is about 1 in 5 of the adult population, so 20% market share. And it's been an incredible journey, really. I think it's really, for me, if I describe it, it's been about solving everyday pain points at scale very, very quickly in a market that's extremely well developed. So in a nutshell, that's Trust Bank.
Yeah, now you use the term rocket ship, and rocket ships are very exciting. They're very fast, but they're not always very stable. So how did you manage all this fantastic growth? What was essential for you?
Yeah, it's we've been fortunate. We've got a fantastic new modern platform. So we obviously had the opportunity to build everything from scratch. And I think in doing so, you build that scalability in from day one. So whilst the growth we had was fantastic, and to some extent we'd expected it, forecast for it, but we'd certainly had planned for it. And that scalability we designed into the platform was absolutely key. It's interesting if you try to imagine scaling in the way that we did with a traditional stack of tech. It just simply wouldn't be possible. You would have either had to have built or prepared for a huge amount of capacity that you probably wouldn't use, or you would have just had to hold back growth and not grow as fast. So now with cloud native, the stack that we had, the ability to just almost switch on it with an instant, the additional capacity we needed to run. That was something which really showed us the power of a modern platform.
Did you do anything special to attract so many clients in this short amount of time? Did you put special programs in place, or how did this work?
Yeah, I think if you go back contextually to the market in Singapore, there were a few things that sort of came together. So first of all, I would describe ourselves in some ways as an ecosystem bank. And that's when you look at different markets around the world. A lot of the banks, the digital banks, the early phase in the West, they were pure play, what I would call pure play organic digital banks. So they built a product set, they identified a customer need, and then they grew around that. But what we did, and it's a path that's been taken by many banks, increasingly so I would say, in Asia, is to build into an ecosystem and really integrate into that consumer ecosystem from day one. So that was a huge factor for us. We were fortunate to be able to work with FairPrice. So FairPrice is the largest supermarket chain in Singapore. It's got over 50% of the market. So huge engagement there. But it's not just a supermarket. It's a very, very rich, engaged ecosystem across many different verticals. So they've got groceries. They've got all the food courts that many of you who have been to Singapore would be familiar with, and convenience stores as well. On top of that, they've also got insurance business, and then linking all of that together is a rewards currency which they use, which is one of the most used in the market or in the country, called Link Points. So we really built into that to make sure that banking wasn't just about checking your balances, doing your regular traditional banking things. It's about really integrating it into your everyday experience. So consumers would be using not just the bank but the ecosystem on a very regular basis. So that ecosystem to me was a really important part of that growth. And I think coupled to that, we were, I would say, somewhat fortunate. We launched and we built during COVID. We launched just as we were coming out of COVID, and of course, the whole population and the whole world had become that much more digital. So the willingness to adopt digital tools, etc., was higher, and particularly amongst certain age groups as well, which previously maybe not have used digital services. So we had these sort of things coming together, which were amazing enablers for us, and really allowed us to then try and focus really on those customer pain points that we'd identified and bring all of that together.
Now, very often the challenge is then if you attract all these clients and you have a good referral program, they maybe get a bit of rewards.
Yeah.
How do you keep them active and engaged?
Yeah.
Because you need that as a bank, because in the end, also you want to make revenues and earnings in the end.
Yeah, that's so true. I think to me, that's not something that needs to fight against each other. That's actually a bit of the flywheel. And for us, that's really what it's been. So our goal was not to get signups. Our goal was to get active, engaged users. And that's a really key difference. So building for those pain points, so the things that customers can really identify are going to make a difference, you then naturally get that engagement. And what we've seen as a result of that is the majority, in fact, over 70% of our new signups have come from customer referrals, which in itself is a great sign of endorsement. People are only going to refer a product or a service if they're happy with it. So to get that, they've got to use it. So it's this flywheel really kicks in, and we found that's been incredibly powerful for us. So aiming for engagement and active users and the real depth of usage was always the goal, not to get customer signups for the sake of customer numbers.
Could you maybe, for the benefit of our listeners, give an example how you kept users engaged and active to illustrate a little bit what you're talking about?
Yeah, sure. I mean, I think just simply having that really strong integration into a consumer ecosystem that's heavily used is a major factor in that. So with Trust Bank as an example, that we're connected into Fair Price grocery stores. Now people will go into the store, they'll collect points for their shopping. We tied our customer usage and reward program into that ecosystem, into that currency. And we were the only partner for that grocery chain to then be able to reward and boost the link points, the reward currency. So that drives usage, that drives people using credit cards, debit cards for payments, for spending. And in turn, brings them into the app, brings them into the service to use a whole range of other products and services as well. So I think that's one example, and that once you get that usage, that regular usage, you can then obviously use the data, use the personalization, use the range of capabilities you've got to then work out what customers are likely to do next, what their pain points are. The more data you get on customers, the more of an insight you have into their behavior, the more you can try and identify what's the next most important thing for them.
Okay. I remember a Ernst & Young study. It's a bit outdated, I admit. It's 6-7 years old, but it said that globally there are around 705 digital banks, but only 12 are profitable. So the big question behind that is, how do you turn then all these active, engaged users into profitable users? What are the things you are doing as Trust Bank? How do you try to get there? Or maybe you are even there. So what is your view on that?
Yeah, it's interesting. And if you look at the study, there's a number of studies that have been done, but they all come up with a similar sort of stat. There's 5-10% of the total banks that have been launched to become profitable. Now, what's really interesting there is that I think over half of those have been in Asia. And the more recent banks as well have accelerated and shortened that time to profitability. And when you look at some of the characteristics that drive that and help to achieve that profitability, it's things like ecosystem, it's things like low cost of acquisition, engagement, exactly as you're saying, Martin. It's a really key point there. So those are the sort of things which structurally and from a strategic perspective, I think really matter. That model, the way you're integrated and the way you try and grow at a low cost really matters. In terms of converting customers into engagement, into financials, yeah, that's obviously that's the key path to follow. And I think really at the heart of that, it's just making sure that you're super focused on solving for what really is a pain point and what really makes a difference to customers, and that's going to vary by market. So in Singapore, what we found was that it's an incredibly rewards focused market. People are really trying to optimize for rewards, for getting the best on what they spend. On top of that, we knew that despite being a very well digitized economy and having banks that have put an awful lot of investment into becoming digital, the interfaces were not easy and simple to use. So designing something which is very easy and intuitive sounds very simple, but actually is a huge differentiator. So that doesn't just come into, how does an app or digital service look and feel, but what's the journey like? How quick is that journey? How easy is it to get a new product or to solve for a financial need when you really need it at that moment in time? So, and then the last thing really was around sort of transparency and real time aspect of data. And data, I'm sure we'll come and talk about in a while, but having something which is real time is huge in in modern day, where people have an expectation of things being immediate, sort of instant gratification type culture. It's real-time data really makes that difference. It allows you to contextualize nudges and prompts and personalization. So those sort of things are the things which go from having a user to having an active user and then moving on to profitability. I think if you just step back and think about what drives the economics, I mean, although digital banks have got a different platform, a different interface, etc., to potentially to some traditional banks, the economics remain pretty similar. It's about taking your money for deposits, lending out on loans, and that's the core of where the profitability comes from. And I think when you look at the pathway that the banks they've become profitable have taken, the ones that have developed a full lending suite quickly, the ones that have managed to get there more quickly as well. So having that full balance sheet capability and then making sure that's tailored and suited to the needs of the particular market are kind of really, really key.
Now, you said you had this rapid growth, and I think through rapid growth, you also get a lot of different clients on board very quickly.
Yeah.
I also noticed that you kind of do, I wouldn't call it experiments, but for example, your reward program also changed over time. So I think this shows your ability to launch things quickly and change it if they don't work. So how do you do that? How can you launch so quickly new reward programs, and how do you measure then success or not success and change it again? How does this work in Trust Bank?
So there's a lot of, I describe quite a lot of structure around that. We're a very lean team, and we have to be very judicious about where we put our capacity. So first of all, there's a real focus on prioritization, and within that prioritization, there's an aspect of what's the customer need, what's the impact, reward, the feasibility. So we look at all these things to try and work out what's going to have the most impact, both from a customer perspective and also from delivering on our strategy. I think beyond that, it's then really about ways of working and remaining focused. We've despite growing rapidly, we've retained a very lean team. It's a relatively small group, and when you look at the size of teams you have in a traditional bank doing what we do, it's tenfold. Yeah, it's hugely different. And that to me is you have a very flat structure. The decisions are very, very quick. So technology clearly plays a part, the ability to change things and do it in a way where you have greater confidence over the impact of those changes is a factor as well. But I think with any sort of setup, if you have a better culture and a way of working, you can get to much faster decisions and testing and changes and adaptations of what you're doing simply through ways of working and the culture that wraps around it. So again, having a lean and a small team allows you to really be very fast and nimble, even when you've got a business that's scaled very, very quickly.
I think there's a lot that speaks in favor from a consumer perspective to bank with a digital bank. Usually the experience is more convenient. It's a little bit more easy to handle. You get good rewards and etc. That's all good. But on the other hand, these traditional banks have this trust mode. So, look at myself. I'm not too happy with my existing banks, but then switching to another player like Trust Bank, for example, the thing is, do I really want to bring all my money there? How do I quickly change all my gyro instructions? There's so many things connected to your existing bank. Are there any things you're working on to overcome these problems? Or
it's a great question. And I think it's something which has been dealt with in different ways by different players in different markets. And in some ways, you look at some countries where open banking has played a role in terms of making switching easier from a regulatory perspective. So UK is a good example where you can switch relatively easily. Singapore is very different. There's no way of doing it. There's no kind of single button auto switch or your payments, etc. So it really does depend. I think you have to build clear differentiation. You have to give a customer, first of all, a real reason to pay up and to pay attention and to sign up. You've got to make sure that process is really, really straightforward and easy to do. And in our case, we've built what we think is maybe the fastest onboarding process anywhere in the world. It's about 2.5 minutes to get a credit card that's working in your phone. So making that process and that experience really simple is super important. But obviously beyond that, there's got to be a good reason. So again, that comes back to for us, it was that ecosystem, giving people who are already deeply embedded in that ecosystem a way of enhancing their savings. That was a way of driving sign-ups, but then driving engagement beyond that as well. And then so when you have people on the platform, it's then down really to that experience, the overall experience of the service you're providing. And that's where we've really tried to stay true to those principles, which repeatedly come back from customers as feedback in terms of what makes a difference in the market we're in Singapore, to that experience. So yeah, it's a combination of different things there, but ultimately it's about giving people a good reason to open an account, and then secondly, really differentiating on the things that do matter to customers. And I think for me, what's been a fantastic learning is the difference that experience makes. I was, I have to say, somewhat skeptical how much you could differentiate in Singapore on experience before we launched it, and since then, obviously, that's been proven to be wrong. So happily so.
Okay. You mentioned data before, and especially when you look at retail banking, all of us are consumers or customers of a retail bank, so we all have our views and opinions, what works, what doesn't work, what is good, what is bad. In the end, I think the only way to get clarity around that is data. So how do you use data in Trust Bank to improve the experience, to improve your products, to improve your reward systems, whatever? How do you use data in Trust Bank?
I think one of the really important principles we've got there is transparency. So we make sure that everyone in the firm has got access to data that matters, and to give them real insight, real connectivity with customers. So I can give a couple of examples of that. So one would be when we get feedback from customers through customer services, that feedback is automatically channeled into Slack, and everybody in the firm has access to that. So we get a raw, unfiltered, sometimes painful view of what a customer is saying, but that potentially painful view and a sort of raw opinion from a customer is incredibly valuable. So that to me is the sort of data which really allows people to provide solutions, to come up and be creative around how we can solve for things. Obviously, we then need to look at things in aggregate. So we pull data from a range of different sources, both from transactional perspective, from anecdotal, from feedback, from what we observe, from testing, all sorts of different sources. But that comes together for us to try and form a kind of collective view on what our customers are thinking, what are the most important things to solve for, both now and in the sort of near future. We're quite structured about that. So we have transparency at source and live data to see what's coming through, but we also have regular sessions which are company-wide. Anyone can join them if they want to, and which run through really where we're at. So the subject matter expert in a particular domain, whether it's research and testing, whether it's customer services, social, all these different channels, and obviously from our funnel perspective as well, the data we get from looking at where customers are going in through our own funnel is brought together into one place, and then we review that holistically, and that then drives. Earlier on, we're talking about the prioritization of what jobs to be done, what things we're going to sell for. That's a huge input into that process to design and to prioritize what comes next.
A lot of people are saying, including ourselves, is that the future is kind of conversational banking.
Yeah.
Because I grew up in a age of branches, as you can tell from my gray hair, and then we switched into digital banking, and everyone went to digital banking, and now with all these AI chatbots, ChatGPT, people are used to. The question is the next stop conversational banking, where you get the same information but not so much in a restricted, guided way like you get it today in your mobile app. What is your view on that?
Yeah, I think our starting point has been people have taken, I guess, a more traditional perspective, but people have been more inclined to use messaging rather than voice. I think that's the starting point, but that hasn't really shifted. That sort of thing is something which has been quite dominant. I think with other forms and other ways of interacting, no massive shifts yet. I think the appetite to engage with what customers may even perceive to be a bot or some sort of agent that isn't human, I think is maybe starting to shift. but really only quite recently, I would say.
Is this why the quality improved? Is this because the quality improved, or is it because people are used to interact like this with other providers?
Yeah, I think it's a bit of both. So the way that people are now, consumers are used to interacting with ChatGPT or some sort of conversational, more probabilistic conversational way of I guess interacting with customers is becoming more accepted. People are getting more used to it. And I guess you can draw a parallel to the journey we went through in terms of just using digital services 5-6 years ago. Pre-pandemic, people were very resistant to doing things digitally, full stop. They'd still go down to a branch. Post-pandemic, people were way more inclined just to do things digitally, and they realised actually it's actually a hell of a lot easier. So in some ways, maybe that shift is starting to happen, but slowly. To your first point, the quality is no doubt massively improving. So the ability to have a contextual, empathetic conversation with a bot now, or with an agentic bot is now possible. And in fact, we rolled this out into our app a couple of months back, and it's had incredible pickup. The response to it has been really, really positive. And it's incredible to see how much people are prepared and happy to interact. And you see this sort of very human level conversations of all the thank yous, etc., which go backwards and forwards from customers to the agentic customer service agent. So that's shifting for sure, but it's still very early days, I would say. It feels it feels like there's a lot, maybe more to come there.
But it should be good news for you, because it for sure helps you save costs on the back of it. If you need to have a few people less in operating the support desk.
It's interesting there. I mean, I think the most important thing there is really about the customer experience. So for a very, very long time, we've had 100%, all the way from launch, we've had 100% human in customer services. And to the extent where sometimes customers would say, I spoke to your bot, and actually it wasn't a bot, it was a human. So it's only very recently that we've changed that. But the reason why we've changed that and brought in agentic now is because the quality is there. And to the extent we can improve the experience, that's when it's worth doing. So if it improves the experience and as a side effect is more efficient to run, then fantastic. But the most important thing is that experience. It's our main touch point with customers beyond the app. So we have to get that right, and that still matters enormously. But I think the way things are going in our experience so far has been that when you've got something which is which you can put into the guardrails and safely do through AI, and the quality is really consistent, the experience the customer gets is really, really consistent, then that can be very much worth doing. But it has to come back to that experience point. If it doesn't deliver a better experience, then it's probably not worth doing.
Okay. I'm sure because Trust has so many clients in Singapore, you also have clients in each and every age group. Do you see a difference in expectations towards experience in the different age groups, or do they all kind of expect the same thing, or what is your view on this?
Yeah, I mean, this was a thing which really surprised us as well. So you'll probably have a similar expectation that typically for a digital bank, the age group tends to be skewed more sort of youth and middle-aged, but partly maybe because of changes from the pandemic, partly because of the ecosystem that we're integrated into. We have about 30% of our customer base, which is over the age of 55. Okay. So we've got a really diversified base, and compared to a traditional digital bank, we have a much wider spread of age groups. To your question, I think, do they have different expectations? To some extent, yes. I think there's clearly for some age groups, some things are more important. So we see, for the older age groups, simplicity and ease of use is really, really important. And we designed around that. So perhaps it's no coincidence we've had strong pickup and engagement with older customers, because we've designed the app to be really, really easy to use. But that was not by design that we ended up with that sort of demographic. the intention to be simple was there. So that certainly was something which was very important. But then again, when we tested for all age groups, that was something which stood out. I think probably what's more important is the needs that you're trying to solve for, and they differ by age group. Different stages of life, different circumstances. You would typically see people who are older wanting to borrow less. They're more interested in investing, managing wealth. Similarly for youth, they're starting out, maybe they can't get credit, so they're more about spending, optimizing, and to some extent saving for the future. And then the sort of more middle-aged groups, or those in that sort of sandwich generation, where they're managing all sorts of things. So, but even then, obviously, circumstances are different. So I think the age aspect is more about financial needs and what you're solving for. And that's what sort of really stands out there.
That's great. You already answered my next question. I wanted to go there, that because usually different age groups means different financial products.
Yeah.
So now you launched the rocket ship. You made it to the orbit. You're circling well around the orbit. So what's next for the rocket ship? What does Trust Bank has in store?
Well, we've just about a month ago we launched trading for the first time. So we opened a wait list about a month and a half ago. And we've been slowly letting customers from that wait list onto the platform to open their trading accounts. So that's US stocks and ETFs. And the big differentiator is we offer fractional. So we're the first banking app in Singapore to offer fractional trading. For us, that's the big space. We launched our first wealth product.
Saxo Bank launched it yesterday, so you just beat them.
There you go. We launched our first digital wealth products earlier this year. That was a funds business, which is a simple first sort of MVP in that sort of space, and then trading is our next iteration there. So, I think that's the next area that we're kind of really focusing on is on digital wealth, and because we want to make things very accessible. We want not just those with larger amounts of wealth to invest. We want everybody to have access. That accessibility to those products and services is very important. So hence fractional being something which really matters. So I think that's certainly a big area of focus for us. And in Singapore, it's an area where we see a lot of opportunity. There's the big traditional banks where the interface and the functionality is difficult and people don't want to do it. And then you've got the more fintech type operators who are not banks, and for some customers that's a concern, and enough of a concern to be a friction point. So we're in that space in between where we've got the UX and the experience of a fintech, but we're a fully regulated bank.
We were talking about the SFF, Singapore FinTech Festival, before we started this broadcast, and is there anything exciting you have seen there, and you say, wow, that's something to watch out for or to consider? Is there anything you saw there?
I think I'm going to give the answer you probably expect me to give there, which is really where Gen AI is going now. And I think it's interesting to see the last couple of years how that's sort of evolved. I think I remember a year and a half ago or so when everybody was talking about it, but when no one was really doing anything, and seeing that shift to now and the sort of things, the sort of opportunities and possibilities that are now becoming the reality for some companies is really exciting. And I think for me, one of the big things there is the accessibility and democratization of financial services. If we take, for example, the digital wealth side of things, the sort of products and services that were traditionally available were only available to those who were more affluent. But the combination of digital banks, the new ways you can serve customers through Gen AI potentially in future, mean that the notion of having a private banker or a wealth manager, you can offer something which is personalised but virtual, and a way that customers maybe in future will also be prepared to adopt. So I think those sort of areas and some of the things we were seeing there. We see some companies or some fintechs and some service providers partners already looking to really develop that sort of area. Those sort of things I think to me are very exciting from an industry perspective, because it really does open up channels and the means of delivering services to customers who otherwise wouldn't have been able to access them. They would have had a higher threshold for wealth and therefore wouldn't have access to products because the channel was too expensive. but through Gen AI, through digital channels, that suddenly becomes possible, which is fantastic. If you think about that, what that means to the masses, that's hugely different.
I think it also increases, let's say, what you need to do on the risk side. You know, because there's always this thing about democratization of wealth, so how the retail clients don't have access to certain things, but I am of the opinion certain things they shouldn't have access to because they cannot carry the risk that is inherent in these products. And I think this very often gets forgotten in this conversation. I saw that the other local banks, and when I went to their booths, they were all crypto. That's for me a typical thing that can end up in a disaster if you invest too much into crypto. So are you also doing things on the risk side to see that you make these things accessible to the people that really have the buying power to go for it?
Yes, I mean, I think the first thing to say there is investing in not just in Singapore but in many markets is hugely regulated space. So you have to be obviously regulated accredited investor, etc., to be able to access certain sort of products, and that doesn't change. So yeah, I think the risk, the understanding, the suitability of some products for some customers, that doesn't change. But even if you take things like take fractional investing, like an Nvidia stock costs $1,200. So if you've got a couple of $100 to invest, you're priced out of that from day one. You just can't invest. If you go fractional, you can just put $10 in. So what I'm referring to is not so much access to complex high risk investments, just simply accessibility to the normal pool of investments that others would have access to. So, and that to me that's a massive step forward. If you can say to a customer, look, you've got $400 to invest, and you can still diversify within that 400. You can access the range of the universe of opportunities that no high net worth individual could access, but do it in a way which meets the risk appetite you've got, the sort of understanding of the products, etc., that are out there. Then that's a huge step forward.
Yeah, I think if you spin this a bit and you look at this option of fractional trading, your flexible tech stack, you can come up with very interesting schemes that you automatically put away savings into an investment scheme that rolls over, etc. I think that there's a wealth of opportunity out there how you can make this also then easy and attractive for consumers.
Definitely.
I see that. Is there anything I didn't ask you or you wanted to mention on the podcast?
I think one of the things we haven't said is a shameless plug about the sort of things that you guys do, and I think the role of data, the way data is used to really deepen relationships with customers is super important. And I think for all the talk about AI is effectively just the use of data. So getting that data right at the foundational level, the governance, the consistency, the quality, and then the enrichment of that data, the way that data is used to contextualize, to personalize is something which is hugely important. So I think I'd love to hear your view on that, Martin, as well. I haven't asked you a question so far, and it's about time I probably did. But what's your view in terms of the way that's going and the sort of key areas of development at the minute as for both for traditional banks and for digital banks?
I think the main challenge people have with data is I think since there is data is turning data into information.
Yeah.
And the more data you have, and today you have ridiculous amounts of data, the more difficult this gets. And so I think you need to have very strong logics around how you analyze data, how you get information out of data, how you then expose data at the right point in time, which is very crucial, because I see a lot of banks spending huge amounts of money on propensity models, which client is most likely to buy this. But then the problem is they never have the right point to then really go to the client with the product offer, because the model just says, well, he's very likely to go for a loan, but maybe the guy never logs into the mobile banking, he never comes to the branch, so when do I sell the loan? And I think this combination of having relevant information and then bring it up at the right location, real time, I think this is very powerful. And this is where I still see a lot of potential, because a lot of people that are on legacy stacks struggle a lot with this. And I think you did a great job in that, combining the two things. bringing them in real time relevant information to a client. I think this makes the difference, and I think this is very untapped in a lot of banks globally, is my view.
Yeah, and I think the point you made there about real time is super spot on. It's we've only been able to tap into the superpowers that Moneythor and other partners we work with have got because of that real time capability. If we didn't have that, going back to that point about differentiation, it's so hard to build that clear differentiation from a customer perspective, but the real time aspect of the data is what really allows you to get there and really do things in terms of personalization or doing the right thing at the right time. It's sort of rather than just pushing stuff to a customer because you can offer that product, it's actually what matters at that moment in time, and you can only truly do that with real time. So, and I think that's where coming back to the shameless plug about Moneythor, that's for us, that's been that capability we've got for real time has been what's unlocked the ability to partner with the likes of yourselves to really bring that capability to customers. And again, if we think about the signups we had, a big part of the virality of signing up to Trust Bank through referrals was driven by that real time experience, the ability to deliver instant rewards, which we worked with yourselves to create that capability, and that was a massive enabler to driving that growth. So, fully agree. Huge amounts of potential in that space, but the ability to do things real time is a critical enabler to do that.
So I'm, of course, very happy to hear that we have been a tiny part of your success. I think we covered a lot of ground. We started with the rocket ship launch, where you had this crazy journey of onboarding so many clients in quick time. Where your agile team and stack helped you to do that. We covered a little bit where is it going. And I thank you very much for taking us on the trust journey. And it was very nice having you on this podcast, Nick.
It's been a pleasure, Martin. Thank you very much for having me here today.